If you are looking to invest in REITs concentrated in Singapore, you might consider Lendlease Global Commercial REIT, as about 90% of its portfolio value is based in the country. However, when it comes to making an investment decision, this should not be the only thing you should look at. In this post, I will be sharing with you more about the Singapore listed REIT in terms of the properties it currently has in its portfolio, along with a look at its financial performance, portfolio occupancy and debt profile, and distribution payout over the last 4 financial years. Let's get started. Before I dive in to look at the REIT's financial performance, portfolio occupancy and debt profile, as well as its distribution payouts, a quick introduction. Listed on the Singapore Exchange in October 2019, Lendlease Global Commercial REIT, or Lendlease REIT for short, invests in income-producing real estate assets used for retail or office purposes. As at the end of the financial year on 30th June 2024, its portfolio comprises of 5 properties in Singapore and Italy worth approximately 3.7 billion Singapore dollars. In Singapore, the REIT owns GEM and 313 at Somerset, along with a stake in Parkway Parade and a multifunctional event space on a site adjacent to 313 at Somerset. And in Italy, it owns Sky Complex, which sits on freehold land. The REIT has a financial year end every 30th June, and in this slide, you will find its financial performance recorded over the last 4 financial years between the financial year 2020-2021 and the financial year 2023-2024. Few things to highlight here. Lendlease REIT saw a year-on-year improvement in its gross revenue and net property income every single year over the last 4 financial years I have looked at. Particularly, the huge jump in its gross revenue and net property income in the financial year 2022-2023 was mainly contributed by the acquisition of GEM in April 2022 and the easing of COVID-19 measures. Another thing to highlight is the 15.6% year-on-year decline in its distributable income to unit holders for the financial year 2023-24 due to a 30+% jump in finance costs. Finally, in terms of the compound annual growth rate of the REIT's gross revenue, net property income, and distributable income to unit holders over a 4-year period, it was at 29.4%, 30.6%, and 13.5% respectively, which I must say it is at a very good rate. Next, let us take a look at Lendlease REIT's portfolio occupancy profile recorded over the last 4 financial years. Portfolio occupancy has been maintained at very high levels throughout the entire 4-year period, except for the latest financial year under review, where it slipped to 89.1%. This was due to a decline in the occupancy rate of Sky Complex in Milan, as Building 3 is currently undergoing repositioning to secure multi-tenancy at market rents. As for the portfolio weighted average lease expiry by net lettable area, even though it has been on a downward decline over the last 4 financial years, but at 7.5 years as at the end of the latest financial year 2023-2024, I consider it to be quite lengthy. Another thing to note is the rental reversion, where it has been on an upward trend, with a positive rental reversion being recorded every single year in which the statistic was made available. Moving on, let us take a look at Lendlease REIT's debt profile in this slide. As a result of the REIT having a low percentage of borrowings hedged at fixed rates, its weighted average running cost of debt jumped up by quite a bit every single year over the last 4 financial years. And because of this, its interest coverage ratio also went on a decline in the most recent 2 financial years. However, with the US Federal Reserve about to commence on a series of interest rate cuts, REITs with a low percentage of borrowings hedged to fixed rates like Lendlease REIT will be among the first to benefit from the US Federal Reserve's interest rate cut announcements. Finally, over the 4-year period, aggregate leverage remains at a healthy level of about 40% in the most recent 3 financial years. The management of Lendlease REIT declares a distribution payout on a half-yearly basis, and in this slide, you will find the REIT's distribution payout for the last 4 financial years. As you can see, A combination of higher borrowing costs and a larger unit base have impacted the REIT's distribution payout over the last 2 financial years, which is a negative. Let us now take a look at Lendlease REIT's unit price movements on a weekly time frame since its listing. As you can see, its current price of about 63 cents is below the IPO price of 88 cents, which is a decline by about 28%. Since the end of November 2023, its unit price has been moving in a range of between a low of 53 cents and a high of 62.5 cents. I have also marked out some of the key price points I've identified based on my technical analysis, along with their corresponding distribution yields based on its payout of 3.87 Singapore cents per unit in the latest financial year 2023-2024 ended 30th June 2024. Every company has their fair share of pros and cons, and the same goes for Lendlease REIT. For those of you who prefer to invest in REITs that are heavy in Singapore, you will be happy to know that as of 30th June 2024, about 90% of its portfolio value is in Singapore, with the remaining 10% in Italy. Also, looking at its performances over the last 4 financial years, its financial performance stood out, where its gross revenue and net property income recorded an improvement every single year. In terms of its occupancy profile, it is maintained at a very high level of above 90%, except in the latest financial year under review due to one building in its property in Italy undergoing repositioning to secure multi-tenancy at market rents. Another thing to note about the REIT's portfolio occupancy profile is that it has managed to record an improving positive rental reversion over the years. On the other hand, a negative will be the low percentage of borrowings hedged to fixed rates, as well as a decline in its distribution payout over the last 2 financial years due to higher borrowing costs. No doubt the US Federal Reserve is on the verge of cutting benchmark borrowing rates, but it will take a couple of months for it to be reflected. Hence, in my opinion, in the coming financial ahead for the REIT, its distribution payout could continue to decline, with year-on-year improvement likely to be seen only in the financial year 2025-2026 ended 30th June 2026. With that, I have come to the end of my review of Lendlease Global Commercial REIT. I hope that this presentation has given you a better understanding about the Singapore-listed REIT. At the same time, do take note that all the opinions expressed in this presentation are solely mine, which I am sharing for educational purposes only. You should always do your own due diligence before you make any investment decisions. Last but not least, if you found this video useful, I would greatly appreciate it if you can give it a like and consider subscribing to this channel so you will not miss out on any videos I will be posting in the future. Thank you for watching, and I look forward to talking to you in the next video.